Good morning, Andrew, Michael, Dornbush Partners, number 23, I think. I was looking back through the archives, dp.net.au. Got every single Dornbush download for your viewing pleasure, for those insomniacs out there. And yeah, look, it's come a long way. I noticed you had a little bit of facial hair. I had a little bit more hair. I've put on about 20 kilos. So yeah, no, things are great.
Yeah,
just like the share market.
So far, so good. Yes, yes. A bit turbulent. Generally, always something interesting to talk about. That's for sure. And absolutely. Of course, yeah, at the moment, plenty to talk about.
Profit reporting season, I'll go first. Profit reporting season, a lot going on at the moment. Generally the reporting has been, it's been okay, but nothing terribly exciting. Again, of real concern is this earnings growth has been actually coming through basically cutting costs. It's not actually coming through revenue growth. And that's okay short term, but longer term, that's a real challenge for businesses, because if they're not reinvesting in their businesses, if customers aren't spending, that's a real problem for businesses. And then we get the odd surprise. So today's surprise is Genworth, GMA rather, getting my surprises mixed up. That was Monday's surprise. And yeah, Westpac have basically decided to self-insure their home loans, which is a bit strange. I can't see how the APRA, the Australian Prudential Regulatory Authority, is going to allow that to occur, but anyway, the shares only off $1, 25%. So it just shows you, if you're not meeting market expectations, the big stick is well and truly out.
Oh, it is, Andrew, and the timing's unusual, isn't it? Because they absolutely came out with a, dare I say, ball terror of a result.
Technical term for those playing at home.
Yeah, threw in a special dividend, and yeah, sort of not 1 week later, they come out with this. So
spot on. You have to think
shop.
That if you're announcing a result on the 11th of Feb and paying special dividends, to then come out 6 days later on the 17th and to say, actually, we have a problem, you can understand why there's some pretty cranky shareholders. Are not happy at all. Anyway, that's my vent. Thank you for listening. What else is happening in your world?
Yes, Andrew. No, I think again, all eyes, as you say, on profit reporting season. Some of the headline numbers, looking good, but reading through and reading between the lines, there's still a little bit of some headwinds out there, no doubt about it. I've been picking up a few Bendigo Adelaide Bank, BEN.
So would that be your top buy for today?
It probably would be. More a bit on the boring side. We're not expecting much growth in the share price. Bendigo, like all the banks, rallied strongly in the last couple of weeks, but announced a 33 cent per share dividend, so that's putting it about 2.5% for the half year, fully franked, of course. But profit was solid, $218 million for the half year. Common equity Tier 1 ratios looking strong, net interest margins okay. But yeah, certainly the headline result looked much better than the underlying sort of numbers coming through. And like all banks, lower volumes, higher expenses. I don't think we're going to see that share price growth that we have, particularly in the last month or so. On the sell side, Fairfax. I've been off media stocks for a little while now, and Fairfax it's been pretty awful for a long period of time. Gina Reinhardt, of course, jumped in there a couple of years ago. She sold out her stake, basically saying that the board didn't have a clue and they had no plans to sort of get the company out of its current sort of status quo, I suppose. So. Decreasing revenues, the market's already factored that in. The expectation is that they will raise profit a bit and maybe even raise the dividend a bit, but for Mind, better opportunities elsewhere. Okay,
and anything else you've been sort of looking at this week?
Not really, Andrew. Again, trying to digest the amount of information coming through. That's been the tricky part. Again, I think that there's always that opportunity, I suppose, to jump in and pick up some dividends, getting shares before they go ex-dividend. That's probably still a theme, I think, for Mind. As you say, really, the reporting season's been okay, nothing of great consequence.
What about Europe, though? Because I know you've been doing a little bit of work on Europe. How does that sort of all fit into this?
Yeah, certainly. I think that's been a big driver of US markets of late, and of course, Greece is in the news for all the wrong reasons again, I suppose. The new Prime Minister there, Alexis Tsipras, I'm pretty sure that's how you pronounce his name. He was quite anti-Eurozone and being part of being part of the European economy. He sort of lightened his opinion a little bit. Basically, he's put the call out to give them an extension for 6 months. The thought is that the European guys will come to the party, but no official as yet. But that's probably keeping markets guessing a little bit at the moment. But likely that there hopefully should be a resolution shortly.
But frankly, even if Greece left the euro, it's not going to have a huge impact. If anything, if the ECB actually try and sort of bend over too much, another technical term, you're going to have some real concerns, because you're going to have the likes of Spain and where all these other sort of fringe economies are at the moment, wanting to go down the same path. So, and we haven't seen as much of an impact, say 3 or 4 years ago when Greece was sort of rattling the cage then. So whilst it's creating a bit of noise, it's probably going to be a bit of a non-event. Next week, more profit reporting, so we'll have plenty more to talk about on that. Otherwise, Michael, you're pretty right.
All good, thanks, Andrew.
Thank you. Till next week.
Thank you.